Nuclear energy is a domain that has been widely discussed in the prior decades. Whilst some had maintained that it is a revolutionary idea in the context of the clean energy transition, others insisted that it is a hazard best avoided. The recent energy crisis across the globe has once again brought nuclear into the spotlight. Europe's dependence on Russian gas supply has exposed the continent to a critical vulnerability, which has caused EU lawmakers to accept the superiority and sustainability of nuclear energy. Uranium, in particular, a commodity that is vital in the production of nuclear energy, seems to show immense promise in the future outlook of the world. Economists expect a nuclear breakthrough to be imminent, which could cause uranium prices to surge. For investors seeking an early position in the upcoming nuclear shift, we present a list of the top 5 most promising uranium stocks to buy. Up first is the uranium industry's star player, Denison Mines Corporation, which trades under the ticker DNN, and is based in Canada. Denison Mines is essentially a holding company that holds within its portfolio some of the most strategic mining assets of the Athabasca Basin in Canada. Athabasca is renowned for possessing the highest grade of uranium in the world, whilst having stored in its mines a fifth of total global uranium reserves. Specifically, Denison holds a 95% ownership stake in the Wheeler River project, which holds a capacity of delivering 6 million pounds of uranium per annum for the next 10 years. It also holds a 70% stake in the Waterbury Lake Site project, which is capable of delivering uranium output of almost 10 million pounds a year for the next 6 years. Apart from holding such lucrative uranium assets, Denison also possesses significantly large quantities of stored ores. Its ownership stake in various joint ventures further boosts its net asset value. The company's liquidity profile is further supported by its holding of uranium securities, through which it is able to fund further development and exploration. All these various holdings deliver Denison a heavy boost. Last year, as uranium prices soared, Denison delivered its highest ever revenue figure of $20 million. Denison has laid out all its cards to brilliantly take the lead in the uranium sector. It stands optimally positioned to gain big, as the wider industry approaches more favorable market conditions. Next up on our list is yet another Canadian stock from the uranium sector, Cameco Corporation, which also goes by its ticker name of CCJ. Cameco is a uranium giant, with a market capitalization standing at almost $10 billion. Cameco stands poised to win big in the short term, given the position it occupies in the global markets. With assets owned in Canada, the United States, Australia, and Kazakhstan, no company understands the uranium supply chain better than CCJ. Through this approach, it is committed to a strategy of capturing full cycle value, through increased demand of electricity for the growing global population. With a renewed global focus on electrification and decarbonization, Cameco Corporation comes up as the most significant name to take the lead. Its competitive edge is that the uranium it supplies is of enriched, rather than the regular class. This feature alone puts Cameco on the verge of an epic growth tale. With the Biden administration seriously considering sanctions on Russian-produced uranium, which supplies a fifth of all uranium to American power plants, few suppliers of enriched uranium stand to meet the task. Cameco, however, seems optimal for this transition away from a dependence on Russian uranium. Cameco holds the perfect balance of low-cost, enriched uranium, as well as the supply-side flexibility to meet the demand of the U.S. utility sector. This is not a stock any uranium growth chaser would want to miss out on. Before we proceed to the next stock on our list, we hope the options presented in this video so far have been insightful. If the list has proven beneficial to you so far, do subscribe to our YouTube channel and turn on the bell notification. Furthermore, we also offer a morning newsletter to our email subscribers. You will get an overview of key earnings reports, recent insider transactions, analyst upgrades, and downgrades. To take advantage of this offer, you can find the link in the description box. If the list has proven beneficial to you so far, we would appreciate you clicking on the like button to show your support. Up next, we present the small, yet highly promising, Texas-based uranium company, Uranium Energy Corporation, also known as UEC. UEC may perhaps be the boldest choice on this list, given its high risk-reward profile. Unlike other stocks on our list, UEC is not technically a uranium mining company. With zero production of the critical commodity, the company has barely managed to generate revenue as of yet. Despite this, however, the stock stands to possible skyrocket in the near future. UEC's business strategy entails buying up uranium at spot prices, with the anticipation of reselling upon a price surge of the commodity. Some might rightfully call such an approach one that is based on speculation. However, a recent development significantly shifts the dynamics in favor of UEC. The company acquired Uranium One, which is the world's fourth largest producer of uranium, for nearly $120 million. It is also under the control of Russia's state Atomic Energy Corporation. Uranium One owns multiple uranium resources around the globe, including in the US, with an approximate annual capacity of 2.5 million pounds of uranium. This would result in an instant revenue surge from the ground up. Each of these factors collectively makes UEC a great uranium stock to buy. Its spot purchase approach for future sales continues to hold high profit potential. With its recent acquisition, its financial sustainability has seen a massive jump, and the company can get in revenue. The fourth stock on our list is the metal and mining mammoth, BHP Group Limited. In addition to uranium, BHP operates through multiple segments that include petroleum, copper, iron ore, as well as coal. The company, which is valued at almost $130 billion, is one of the largest names in the resources market, which supplies to markets on every continent. BHP is a great pick, because it could see sustained growth with the anticipated resurging demand for uranium, amidst the present global energy crisis. With its vast diversification in the metals business, its risk would remain relatively low in comparison to some of the other stocks we have listed. These characteristics make it ideal to buy and hold in the long term. With favorable conditions in the uranium market, BHP could see impressive value addition. However, even if things play out the other way, the company would remain profitable through its other business segments. What's most impressive about the stock is its valuation metrics. In the recessionary mass sell-off, BHP has fallen by over a third of its share price of a year ago. This makes the stock extremely attractive to buy right now. Moreover, its dividend yield has been bumped up to 14%. This is a golden investment opportunity for anyone to consider, whilst remaining safely exposed to the potential gains of uranium. The final stock on our list, yet far from being the least, is Uranium Energy Incorporated, which trades under the ticker URG. Uranium Energy is a company that has made significant progress with the uranium markets. This year in particular had been stellar for the company, where uranium prices hit a 10-year high. URG had also steadily improved its liquidity and balance sheet, as a result of this enhanced profitability. Through its impressive inventory levels of uranium, Uranium Energy stands perfectly positioned to win big in the present global energy crisis. Its performance over the years has substantially boosted its financial sustainability, and thus improving its standing amongst market participants. What remains most impressive about the company is its Lost Creek project in Wyoming, which it aims to restart this year. The net present value of the project has been calculated at a whopping $200 million. To put this figure into context, URG holds a market capitalization of a mere $230 million. The output of this project alone would allow URG to achieve operational leverage, whilst ensuring its financial prospects are further boosted. Due to these features of the company, URG is a stock one cannot simply brush aside. That's all from us in this video. We hope the insight we aim to deliver has proven valuable to you, and would allow you to ensure your portfolio is well suited for long-term growth. We would love to hear your feedback about our list in the comments below. To gain a deeper insight into different stocks that are fit for various investment strategies, be sure to check out our website, stockstelegraph.com.